So in today's video, I'm going to cover another listener question. Arun has asked me, where is it better to invest? Here in the UK, which is a very established economy, or back in India, which is, as we all know, is a very up-and-coming economy. So to compare the differences or the similarities, I'm going to cover 6 different scenarios. Number 1 is tax advantages. Number 2 is currency devaluation. Number 3 is growth. Number 4, I'm just going to cover property investment here and there. Number 5 is the global markets, and number 6 is stability of the economy. And I'll show you this chart as to compare the headings as we go along. Firstly, a big caveat, this is my personal opinion. Please continue to do your own research before you invest your hard-earned money. So let's look at the first heading, tax advantages. It's often tax advantages to invest in the country where you're a tax resident. Here in the UK, there is 2 big tax breaks that we can all avail as investors. One is investing in a pension, and second is an ISA. I'll come to ISA in a minute, but pension, you can invest in a pension and the government gives you a lot of tax relief for your investment. So they give, depending on your tax rate, you can get either 20% back or 40% back or even 45% back depending on your tax relief. And immediately your money is uplifted by 20%, 40% or 45%, and nowhere in the world you're going to get returns like that. So investing within your pension is certainly a very, very, very big advantage. The big disadvantage is you cannot access that money till your retirement age, and especially if you're like me, an expat in the country, and if you're thinking of leaving the country at some point in the future. There's 2 different options. So if you're a government employee, so like working in the NHS and things, you can transfer the money, you can receive the money at whatever point when you're at your pensionable age. So for the NHS pension, the retirement age must be 65 or 68. So at your retirement age, you can receive the money anywhere around the world. If you're a private pension holder, then you can transfer your pension lump sum via something called the co-ops, Q Qualifying Recognized Occupational Pension Scheme, QROPS it's called, and there is, I'll put a link in the description box below. This is for anybody who has a private pension scheme. You can transfer the pot to several banks in India, whether it's ICICI, HDFC, several banks, several big banks are participating in this. And you can still access the money only at retirement age, but you can transfer the lump sum and you can have it in your bank in India, and you can access the money that way. So pension is a very big option to look at in thinking about tax relief. The second big option is ISA, investing in your ISA. The advantage of investing in an ISA is whatever you withdraw, whether it is if you've invested £1,000 and over 20 years, it's grown to £10,000. It's completely tax-free when you withdraw. So all the growth, all the dividend, everything is tax-free when you withdraw. So that is a big tax advantage investing here in the UK. And if you decide to leave the country at whatever point, you can just close the account and take the money with you. Or if you may want to come back to the country at a certain other date, you can just leave the money invested here and the money will just continue to grow. But you cannot put any more money into an ISA unless you're a tax resident of the country, of the UK. Whereas investing in India, you're taxed at 10 or 15% depending on how long you're invested for. Unlike an ISA, even if you invest for a day or a year, you can withdraw it all tax-free. Also, the transaction costs are higher in India. If you use a platform, all the platforms have some transaction fees, but the government has stamp duty and GST, so there's added fees on top. So there's less money going into the pot overall. So if you compare in India versus UK, just with tax advantage, it is definitely more beneficial investing in the UK. The second comparison point is currency devaluation. So I'll just show you a rough example to explain this point a bit better. Say 20 years ago, I invested £1,000. Same £1,000 here and £1,000 equivalent in India. 20 years ago, the currency exchange rate, £1 was 75 rupees. So for my £1,000, I got 75,000 Indian rupees. And say the stock didn't grow at all. It was exact same stock and there was no growth in that stock. So 20 years later, my £100 still is £100. But my 75,000 rupees, if I then convert it and bring it back to UK, is only 750 pounds. So over the last 20 years, Indian rupees has devalued. And I can hear some of you saying that India is a thriving economy, and it is. The currency will go up in future. Looking back in history, we can see the currency has devalued. Don't know what the future holds. It may go up, it may go down. Don't know. And also the currency fluctuates from time to time. So roughly, I said it's 100 pounds. Currently, over the last 2 or 3 weeks, it's running at around 95, 96. So there is a lot of currency exchange variation from day to day. So you lose money transactionally because of the variable rate from day to day. Also, there's transaction charges as you send money. So I just roughly did it on a online money transfer service. I just use Wise to calculate. So if you send 500 pounds each month, you charged about £4.30 for each transaction. So if you do that every month, that's just 50 pounds in transaction costs. So if you add the transaction costs to the currency devaluation plus the tax advantage, I think definitely investing in the UK trumps. The next comparison point is to compare property investment in the UK versus investing in India. For a comparison, I'm doing only property investment. If you want to build a home in India for your parents or for you to go back and retire one day, that is a totally different story. That is not investment. That is something you want to do it for your future. I'm looking at just property investment in pure terms. The data I found is from the Economic Times. It has shown that over the last 5 years, property has gone up by 9.8% in India. And certain cities and things vary, but that is universal. That's a fact universally. Some cities grow more than others. Comparing that to the ONS data, the Office of National Statistics data, just this last year, 2021, the property has grown by over 10%. It's actually 11% to be specific. I know there's been a rapid boom over the last 2 or 3 years with property in the UK. Usually, the property market sits between 3 and 4% of annual growth. Even that beats the 5.8% return investing in property in India. And on top of that, there is a lot of ability to leverage in the UK. Here in the UK, you can put down a 25% deposit for a property and you can borrow 75% from the bank at very low interest rates. But in India, you have to put a larger deposits, and often the interest rates are quite high. So we like to repay that quicker. So you cannot, the ability to leverage is not there. So overall, the returns from property in India versus property in the UK is a winner again. The next thing I wanted to compare is investing in stocks and shares, what the growth is compared to India versus the UK. So if you invest in a box standard SIP, a self-investment platform in India, the average growth is between 10 and 15% in the Indian stock market. And here in the UK, if you invest only in the FTSE 100, the growth has been a very, very nominal 5%. But here in the UK, we would usually invest in a global market, and the global market is still only about 7 to 8%, which is very less compared to the Indian SIP, which is 10 to 15%. However, there's a big but. The inflation in India sits about 7% annually. Recently, it's been quite high, but generally it sits around 7%. However, the inflation in the UK sits usually between around 2%. Recently, it's been quite high, between 7 and they're predicting up to 10% inflation. But usually the government keeps it around 2% inflation. So if you compare the growth within the stocks and share market between UK and India, and then add on inflation, it works out more or less equal between both India and UK. The next thing I'm going to compare is a global market. So this point specifically is for general knowledge than anything else. While we are very proud of the Indian companies, we're like proud of Reliance, we're very proud of Infosys, we're proud of all the nifty companies, and we are generally very biased towards the Indian stock market. I'll show you a chart. This chart shows the global stock market. As you can see, most of the global stock market is owned by America. America has more than 50% of the global stock market. If you scroll down, the UK is just around 5% of the global market, and India is not even on the list. The Indian stock market is actually only less than 1% of the global stock market. So as proud as we are of our Indian companies and how well it is generally doing, it is still only less than 1% of the whole global economy. So we should always focus on investing in the world, or certainly not leave America out, because America is the biggest holder of the global stock market. The next thing I wanted to compare is the stability, or how safe your money is. So apps or sites like Zerodha or Upstock, these apps has only been around for the last 10 or 12 years, whereas here in the UK, platforms like Hargreaves Lansdown has been around for 40 plus years. Or if you look at Vanguard, it's been around a lot longer, operating a lot longer. Just the security of your money, this has got more of a track record. The apps and sites in the UK has got more of a track record than the apps and sites in India. Also, very importantly, the FSCS regulation. In case the company Hargreaves Lansdown or Vanguard goes bust, the government has protected our money with the FSCS regulation. So up to £85,000 of our money with each institution. So you can put 85,000 with Hargreaves Lansdown, or 85,000 with another 85,000 with Vanguard, or similar. The government has protected our money for up to 85,000 per institution, per person. So for stability of my money, or the security of my money, I feel here in the UK there's a lot more protection than for my money in India. So here is the final chart. Now, what do you think? Where do you think you want to invest your money? Personally, for me, after looking at the pros and the cons, I've invested most of my money here in the UK, just looking at the tax advantages, plus the forex charges, and generally the safety of my money. I feel my money is better invested here in the UK. You may decide to do something totally different. Although saying that, if you have money already in India, say if you have a rental property and money coming in per month from that, I wouldn't then look at bringing the money across each month or a few times a year to then invest it here. I would look at investing that money in India. Let me know. I would love to know what you think about this video. Where would you invest your hard-earned money, here in the UK or back in India? Let me know in the comments below. You may want to check out my other videos on saving more money. Until next time, stay safe.